Good afternoon and welcome. My name is Sharice West Scantleberry, and I have the honor of being the president and CEO of the Winthrop Rockefeller Foundation. On behalf of the foundation, I'd like to welcome you to today's conversation on how we close the access to capital gap. The foundation's mission is to relentlessly pursue economic, educational, social, ethnic, and racial equity for all Arkansans. In our relentless pursuit for economic equity, we have three criteria for success. We want to see thriving communities. We want Arkansans to have living wage jobs, and for all Arkansas entrepreneurs to have the opportunity to build generational wealth and access to capital. Solving the capital access challenge of small business owners is critical to all three of our criteria. Pre-pandemic, growth of small businesses was on an upward trend, creating jobs, adding employers to the workforce, and generating millions of dollars to the economy. In our study that we're releasing today, Arkansas Small Business Access to Capital Study, which was done pre-pandemic, we found that despite that growing trend, despite the importance of entrepreneurship to Arkansas's economy, small business owners, particularly women, people of color, and other underserved populations, face significant barriers to accessing capital from banks and other traditional resources. So what are some of our headlines? Only 2% of nearly $1 billion in business financing deployed through the SBA 7 loan program, only 2% went to businesses owned by Black and LatinX entrepreneurs. Businesses owned by people of color disproportionately have to rely on personal funds to start and grow their businesses. Business owners of color perceive that traditional banks do not support them or cater to their business needs. And community development financial institutions are most responsive to entrepreneurs of color and women, and that community development financial institutions should have their capacity supported to support these business owners. The disparity in government capital support and traditional banking support during the COVID-19 pandemic has only exacerbated the inequities in Arkansas and nationwide, but particularly in Arkansas. These widespread disparities in capital access have gotten worse as the Paycheck Protection Program has relied on our existing system of financial institutions, a system that has traditionally excluded a disproportionate number of people of color and women who were unbanked or underbanked. Moreover, the only capital available to the smallest businesses is often accompanied by exorbitant interest rates and confusing payment terms. We absolutely must ensure that long-term, equitable, responsible capital is available to enable small businesses to thrive and survive in Arkansas. Non-traditional lenders, such as CDFIs, that are mission-driven lenders that uniquely lend to communities left behind by traditional banks, are key partners in this. To fully realize the economic potential of small businesses, we must ensure greater access and more options for entrepreneurs to obtain responsible capital by enacting the policy recommendations and action steps that are found in our study, Arkansas Small Business Capital Access Study. So today, in releasing this report, we're doing so in partnership with stakeholders, and we have some very specific goals. We want to work together for greater access and more options for entrepreneurs to obtain responsible capital by enacting the policy recommendations and actions in this study. Our goal is also to reduce barriers to capital access from financial institutions and other traditional sources through re-envisioning and implementing a robust small business capital infrastructure that provides patient and flexible capital directly to minority entrepreneurs and women entrepreneurs, and directed by minority entrepreneurs and women entrepreneurs. Another goal we have is to pass policies and incentives to make the banking system respond more equitably during the post-COVID, including the Paycheck Protection Program, which has done better, but still is not at best it could do. And we have the goal of elevating the story of how important women and minority-owned small businesses and entrepreneurs are essential to Arkansas and our long-term economic success. So again, I want to thank all of you for joining us in this discussion to better inform how we can close that capital access gap. We're thrilled to be joined today by our principal researcher of the Capital Access Study, Dr. Julia Cheers-Young, who will provide more of the highlights of our study and its findings. Following Dr. Young, we are joined by several Arkansas thought leaders in the area of finance and economic development to participate in a facilitated panel discussion surrounding the issues of access to capital. Before I turn the program over, I want to encourage you to place any questions or comments you have in the chat box, because we will save time later for Q&A, and we will bring up what's in the chat box and any questions you all may have. It is our sincere hope that this is not the last conversation, but actually the first in a series of conversations on ways the financial community can provide additional support to women, people of color-owned businesses, and entrepreneurs, not only through increasing the percentage of capital and SBA loans, but also by adopting the practices and policies that best serve these entrepreneurs and enable us to close our racial and gender wealth gaps. With that, I'd like to introduce Dr. Julia Cheers-Young, who will talk more about the study. Thank you.
Thank you, Dr. Sharice. Hello, again, my name is Dr. Julia Cheers-Young. I'm Principal Researcher of Precise Data Consulting. I want to first begin by thanking Dr. Sharice and Corey and all the staff of the Rockefeller Foundation for this dynamic opportunity to be a part of the work they are initiating around economic equity. I would be remiss if I didn't also thank a few other people who were instrumental in the implementation of this study and the whole process. So first I want to give thanks to Benito Lubazibo at Remix Ideas for his forethought and pursuit in advocating for a study like this, as well as to many organizations around Arkansas, including Arkansas Small Business Administration, the Chamber of Commerce, including Arkansas, the State Chamber, our very own Little Rock Chamber, Fayetteville Chamber, and many other chambers across the state, the Arkansas Economic Development Commission, as various Arkansas Small Business Technology Development Centers around the state, the Northeast Arkansas Planning Development District, and many other colleges and universities in the state that all played a role in the implementation of this study of this magnitude. As I often hear Corey say, it takes a village. And in this case, when it came to this study, it took a whole village to make this happen. And so I'm grateful for all those that helped and participated. Next slide. So there were 5 research questions that guided the study, but for the purpose of the time for the discussion today, we'll only highlight the 2 research objectives that were most relevant to today's discussion. The first one was to explore the barriers that cause disparities in access to full and participation in lending in business capital programs, particularly looking at the disparities of access to capital when it comes to small business owners of color and women, and to ascertain the degree in which the local financial institutions support the advancement of minority-owned businesses and their access to capital. And so the study was in 4 phases. Phase 1, we issued an electronic survey. We had a total of 307 participants. The final analysis included 237 business owners and entrepreneurs. 58% of our business owners were minority, 61% of them were female, and we had respondents that participated from 35 counties across the state of Arkansas. Phase 2 of the study involved focus groups, and in those focus groups, we did 5 focus groups. We just split the state up into 5 regions. And so we conducted a focus group in the northeast, the northwest, the upper north, east and west of the state, southern east and west of the state, and in central Arkansas. And so we had a focus group that we did in Hope, one in Jonesboro, one in Little Rock, Monticello, and Russellville. There were 38 participants altogether, so we averaged about 7 to 8 participants per focus group. 84% were minority in all, and 58% were female. Phase 3 of the study included, so from the focus group, we selected 5 people to dig deeper into more of their stories. And so in phase 3, we did 90 to 120-minute interviews with those 5 business owners. 3 of them were female and 2 of them were males. And then in our phase 4 of the study included analysis of secondary data. And what that is, when I say secondary data, that's data that's already been collected by someone else. So the first 3 phases of the study was what would be considered primary data, data that we organically collected on our own. And then phase 4 was data that was provided to us that was collected by another entity or organization. So some of the key findings, here we're only going to highlight some of the key findings. There'll be more findings that you would find in the full report that is being released. So here we're only going to cover some of the ones that'll be relevant to today's topic. Some of the things that Dr. Sharice had already mentioned. So one of the key findings we learned from the study was that when it comes to starting a business, entrepreneurs of color tend to rely more on personal funds to start their businesses. Entrepreneurs of color reported relying on their savings, relying on working a full-time job, and so their household income revenue to be able to fund their businesses, as well as things like credit cards and student loans, because they are saying it's easier for them to get money from a credit card or to get a student loan than it is to get a business loan. As well as we found in this study that the number of minorities and whites who reported that they applied for a loan were about the same, but white business owners were approved at a higher rate, while minority business owners were denied at a higher rate. And so when you look here at this data, people applied for loans over the last 3 years, the ones that were responding to this survey. They were asked how many times did they apply for a loan? So people applied for loans multiple times. So if you're looking for these numbers to be equal up to 100 evenly, that's the reason why it's not going to, because people apply for loans multiple times. So sometimes they may have been denied, sometimes they may have been approved. So some people experience both, having been denied from a loan for a loan, as well as having been approved for a loan. So the next slide, we'll see where when women apply for the loans at lower rates, the men, so 2 out of 5 women compared to 3 out of 5 men, but yet that men, they were both approved at the same rate. It looks like the graphic on my end looks like it's missing. If you click it, will the graphic come up? Okay, yeah. So the previous slide was basically showing that women applied for loans at a lower rate than men. So 2 out of 5 women compared to 3 out of 5 men. But yet what you would have seen in that previous graphic was that the rate of approval was the same. So even though less women apply for loans, the rate of approval is the same and the rate of denial is the same. So they're being denied at the same rate and approved at the same rate, even though less women tend to apply for the loans than men. So in essence, what that means for some of you that may not know how to interpret that, what that means is, in actuality, men are being approved at higher rates because more men are applying for the loans. So one of the things that was evident from the information gathered in the survey, it was further explored when we did the focus groups as well as the case studies, was the relationship between business owners and lenders. And so what we found is that white business owners felt more supported by lending institutions than their minority counterparts. And so the ratings on their experiences, as you'll see in the next slide, the rating on their experience on loan process was lower for minority business owners. However, look at it overall. Overall, across all business owners, regardless of race, on average, no one really reported their experience as being a 5-star experience when it comes to the lending process in the loan, in their experience with the lenders. So one of the things that you heard Dr. Sharice highlight, was that we received 2%. When we talk about Black and brown business owners receiving less than 2% of all the SBA 780 loan dollars, right? So Blacks and Hispanics and American Indians receive less than 2% of the total loan dollars. While when you look at it, Black business owners in Arkansas represent 9% of small businesses. And so when you think about it, the Black owners, the amount of dollars received are not proportional to the percentage of business that they bring to the state's economy. And so that was all a part of the first, as we want to call it, the initial study that was conducted in 2019. So fast forward to last year, the pandemic hit, and we all know that a lot of businesses, especially small businesses, were adversely affected by the shutdown, right? And so again, Corey came back around and approached me again, and he said, hey, I want to be able to look at in real time what is happening to our businesses, our minority businesses here in Arkansas. How is the pandemic affecting them? And so we did another study last year. So we looked at this as being an amendment to the 2019 study, but we were actually collecting data real time. So in this study, the research objectives was, one, to amend the first study, but also to look in real time the impact of the COVID-19 pandemic on small businesses in Arkansas with access to capital. We know that there was stimulus dollars released, and so there was the PP loan dollars and the EIDL loan dollars being given out to businesses, but how much of that was actually being distributed to minority businesses? And so we also wanted to look at how could this help us implement strategies and solutions to support the small businesses of Arkansas, and still keeping in mind with WRF's strategic commitment to advance economic equity. And so we did a study. And so what we did was we issued a survey in 3 time series stamps. We issued it in May, June, and July of last year. It was the same survey given 3 times to the same participants. And so altogether, we had 50 participants that participated in the final analysis of the survey. And so what we found with that is some of the things still supported the same findings from the 2019 study. For the ones that had applied for any kind of funding, any of the loan dollars, there still was approval of whites or non-minorities at a higher rate than minorities. So that was still consistent with what we had found a year earlier. Next slide, please. And then some of the other key findings was when we asked, and this was very interesting, when we asked them which banking institutions did they use to apply for PPP and EIDL loan dollars, here's how it panned out for our business owners around Arkansas. So for minorities, both of them equally applied at local and small banks. And we describe local and small banks as banks such as First State Bank, Community State Bank, Merchants and Planters Bank. And we describe regional banks as being banks as Arvest, Simmons, and Bank of Ozarks, for example. And so it was very interesting that white business owners, they applied for lending at regional banks at a higher rate than minority business owners or business owners of color. But business owners of color, they looked and applied at national institutions at a higher rate than white business owners. And so national institutions would be things like Bank of America, US Bank, Wells Fargo's, banks that are on more of a national level. So that was kind of interesting. And then we also asked who assisted, if anyone, with the application process. And so if you look here, 71% of white business owners, they felt comfortable with going to the bank and having someone from the bank assist them. Whereas when it came to entrepreneurs and business owners of color, only 68%, so almost equivalent, almost the same amount, said no one assisted them at all. And so it goes back to the what our findings from last year, where, hey, some of them aren't feeling supported by these institutions, so they don't even bother to go into them for assistance or help. And then on average, how was the experience? Again, it was consistent with what we found in the 2019 report. There still was better rating for experience and support from the white business owners, whereas with our minority or business or people of color had lower ratings, but no one still had that outstanding 5-star rating. And so as far as the loan dollars, so the total loan dollars for the elder loan at this time, this was about $145,000, $145 million. 19% of that minority said they received. Now, I will tell you that this was not data that was provided to us by the SBA. This was self-reported data of what they said they received for loan dollars. So this was the total amount of loan dollars for the ones that responded to the survey of what they said they received. And of those total loan dollars, this is how the proportion, how it panned out. So some of the things that our firm and the team of researchers that were involved with me conducting this study, some of the recommendations that we came up with is to provide more fiscal support to programs and devoted to developing and implementing a turnkey approach to offering technical assistance for small business owners. Being able to provide business owners with more of a support or supporting those programs that will help support business owners so that they can be more lender ready and be able to go into these institutions with all their ducks in a row and dotting all their I's and T's and be able to compete with the ones that are getting these loans. And so also being able to implement higher levels of accountabilities and standard to not-for-profit organizations who finance these loans and other lending products to entrepreneurs and small business owners. One of the things I heard Dr. Cherise says is they want to change policy, and that's where this will be able to come in and be useful and be able to support large-scale campaigns and initiatives that focus on generating awareness and marketing, especially in underserved communities. So here, what we're saying here is some of the things that we found in these two studies was that there was things people just did not know either. There was things they just did not know about what was available to them. And so being able to support more campaigns and initiatives that focus on marketing to business owners of color and women-owned businesses, as well as providing fiscal support to startup lending programs that encompass education and assistance that focuses on lender readiness, financial literacy, and business basics to help business owners access to capital and develop a viable, sustainable business, as well as advocate for policy change and regulations that promote the growth of startups and small businesses, especially so that people don't have to rely so much on personal funds, but they're able to access the type of capital that they need so that when they start off a business with the type of access or type of capital that they need, then they're able to grow and sustain those businesses a lot quicker than those who have to rely on personal funds or rely on still working a full-time job in order to fund their business. And then the last one is to be able to support more conferences and summits geared towards educating lenders on the intricacies of various business segments. One of the other things that were found in the report is that sometimes people felt their type of businesses were not supported by lending institutions. Like there's a one-size-fits-all loan for everybody, but everybody's business doesn't fit into that loan program. But everybody's judged on those same criteria. And so that's my time. I'll turn it back over to you, Dr. Cherise.
I'll take it from here, Dr. Cheers Young. Thank you so much not just for articulating that for us, but for the research that you did. I also want to thank, because I don't think we did it, but Windrock International and the Arkansas Community Foundation also helped us to fund these reports. And everybody is looking at this challenge that Dr. Cheers Young has laid out, right? You know, the data is pretty clear. There are some groups of folks that just aren't getting access. So what we want to do now, we thought it would be irresponsible just to toss all that data out there without having a conversation about it. So we brought together a panel of folks who represent the various pieces of the system. So we've got Miguel Lopez, he's Chief Community Outreach at Encore Bank, which is a small bank, mostly virtual. Darren Williams, the CEO of Southern Bank Corp. When we look at lending, particularly to Black and Latinos, Southern is a CDFI that's leading that work. Edward Haddock, who's the district director of the Arkansas Small Business Administration, who's got purview over some of these resources that we're talking about. Bridget Perkins, who's a small business owner, and Hillis Shields, the director of community partnerships for Arvest Bank. So we wanted to bring together everybody that had a piece of this puzzle to talk about how we move forward, to talk about how we do better. And when I say do better, it's pretty simple to me. You know, how do we get more money into the hands of Black, Latinx, and women-owned businesses, particularly small business? Like, to me, it's simple, it's straightforward. There's a number that we're looking at that we can figure out how to grow over time. And I think we've got the folks here today to talk about how that happens. We want to talk to Ms. Perkins first. As a small business owner, I think I remember meeting you again. Shout out to Benito one more time. I think I ran across you and Benito sitting down talking about this very issue, access to capital. I believe you were trying to buy another truck or 2 trucks or 3 trucks. But Ms. Perkins, talk about how this strikes you as a small business owner, as part of the target that how does this data strike you?
Can you hear me? Okay, for some reason you went mute. But for me, I mean, wow, everything, it's very real. I literally, if I were able in the beginning to procure funding, you know, from a traditional financial institution, things would have been so different for my business. Of course, I went the route of, and I had excellent credit. So, you know, knowing and having knowledge of where to go and, you know, who to talk to, that's key, that's major. You know, starting off, I did not know that, and I paid for that because number one, it matters which financial institution you choose to do business banking with. It very much matters. I did not know that there was a difference. So that coming into play, that really, really did it for me, did me in, because I did not know that, you know, all financial institutions were not the same when it came to small businesses. Some do not prefer to work with small businesses. And there are so many roadblocks in the beginning from, oh, you haven't been in business 2 years. So, you know, you already have your first red flag there. So you're considered a startup, and, you know, we don't typically fund startups, or however, you know, the outcome comes for that. But majority of the time I did. Everything from the beginning, I paid out of my pocket, out of my savings, still working, you know, a full-time job, and supporting my business. So the data is very much accurate. I mean, it's amazing, but yeah, you do not feel that support from traditional financial institutions.
Great, thank you. And I'm coming to Edward next at the SBA, but Ms. Perkins, tell people what your business is. There's 100 folks on here. There may be somebody that needs your services.
Okay, no problem. I am a construction company. I do subcontracting and have dump trucks. So we haul in dirt, rocks, gravel, sand, asphalt. So we are a trucking company, and we haul for construction companies, general contractors.
Great, thank you. So Edward, I'm coming to you next. Ms. Perkins just described what seems to me as a viable business and a business that folks need as much construction, but yet she had trouble getting access to the resources she needed to get started. We talked about that, that 2%, that 3% number for Black and Latinx businesses, via the SBA, and there's some other pieces to the puzzle. But talk about, as the director here locally, talk about the things that you all are doing to help ameliorate that challenge, and what may be left to do from your perspective.
Absolutely. Great question. And Bridget, so good to see you. I'm glad your business is open and continuing to grow. Bridget and I met I think years back as she was just getting off and starting her business. So it's great to see small businesses continue to face the challenges and of course come out successful. We know it could be accelerated. I think that's one of the things that I take on every day in my seat. I also want to, Corey, thank you and the entire Winthrop Rockefeller organization for conducting this research and getting this information out to us. This is valuable, and this research really does validate in some cases where we are going right and what things are happening, where we are in line with the national average of self-funded and individually funded businesses. But it also shows us that we've got many of challenges within our traditional banking environment that we need to address. I think those have been significantly exasperated over the past 6 to 8 months here with COVID. And so what we continue to do is help integrate the SBA product offering into the banking environment. Now, 5 years ago, we only had about 15 to maybe 20% of the total banking institutions in the state using SBA loan products. So my number one goal when I came to the state was to increase that, to get more banks using our SBA loan products to help minimize the risk to these new borrowers, because the banking environment and the culture of the banking environment is risk adversity. And so our products and integrating our product offering into their banks really helps them fill out their toolbox to find borrowers like Ms. Perkins here and really extend credit to them when normally their credit policies wouldn't allow them to do that. So the more we can work with those institutions and deliver our credit products out to them and teach them how to use these products, the greater access we can get through the traditional banking environment. Additionally, we have to find non-traditional funders in order to help increase that. And that's the big growth opportunity Arkansas has. So Corey, I'll pause there and turn it over to you because I know we want to get a lot of conversation in today.
Great. Thank you, Edward. I appreciate that. So Hillis and Miguel, I'm coming to the banks next. The way that the system works, right? And we're systems change people, right? Like we can loan money to our friends, we can borrow money from our family, but the real capital is in these public and private systems, right? So we're systems folks. So I want to talk about this, the banking part of the system. So I want to go to Hillis first. Arvest obviously is huge. Arvest is our homegrown, Arkansas bank, and does some of this SBA work. And my guess is does some of it really well. And then, as we've talked about, there are these challenges around, getting some of those resources into the hands of borrowers and small businesses of color. Talk about the things that Arvest is doing and thinking about. Again, all we're talking about is like, how do we get more money into the hands of business? That's the headline topic for everybody. But so talk about how Arvest sees this and how they're trying to address the challenge from y'all's perspective.
Well, Corey, just to kind of let you know, I've known Corey a long time, and after 27 years in banking, I decided Arvest was the place for me. And really, I want to tell you why that is because their mission statement is people helping people find financial solutions for life. Every single day, we talk about that, and we talk about it in regards to some of the data that was shared just then. Some of the stuff that Bridget shared with us, and definitely some things that Edward mentioned in his comments. We really are trying to figure out how to do things better, how can we reach out to our small minority-owned and women-owned businesses better? We're looking at creative products every single day. We are looking at, you know, how does outreach and education play a role in encouraging minority businesses and small business owners to come into the bank and just have a conversation. My guess is Ms. Perkins, when she started this, had she just had a trusted banker that she could have come in and just sat down and just had a conversation with before applying, that it would have made a lot of difference to her on what financial institution she chose and how her process went. And so I think this is a very important start to a conversation that's needed to happen for a lot of years. And so I'm really looking forward to it.
Great, thank you. Miguel, same question. Now we know that you know, Encore is a smaller bank, you know, less physical locations, more virtual. But in the conversation that you and I had, you talked about, you know, the way that you all have been able to pull in, particularly LatinX businesses, sort of at percentages in a scale that other people might not be able to do. Talk about how you all do that, because I think it's probably related to some of the things that Hill.
Yeah, absolutely. Thank you so much, Corey. So one of the first things we did earlier this year was we we hired an SBA team. We realized that we didn't have an SBA team. And to the points that Edward mentioned earlier, we realized that that's something that was important to our mission as a bank. We've also reached out to the AEDC to say, hey, we wanted to participate in the loan mobilization program that is like an SBA loan, except theirs is 90% guaranteed by the state, right? So that we can able to extend these credit facilities to businesses that maybe wouldn't have traditionally fit. But also more directly, one of the things that I'm the most proud of is we're going straight to those businesses. I speak to you today in South Dallas. We just opened up a loan production office and soon to be a full service branch in Dallas. And we realized that there's a lot of parts of Southern Dallas that are just unbanked or underbanked, but there's a lot of businesses here, right? So I'm not just sitting behind a desk all day waiting for them to call us. I'm going out there, I'm pressing flesh, pounding the pavement and saying, hey, you know, I want to be your bank. Let us help you. But we also realize that it's really hard to go from unbanked or underbanked to getting an SBA loan, right? There's got to be kind of an in between. So we're in talks right now with Goodwill of Arkansas and Goodwill of Dallas to open small business centers on their campus and bring in entrepreneurs and say, hey, you know, here's what an SBA loan is. Here's why it might make sense for you, right? Here's what the AEDC is offering. Now, I'm not a loan officer per se, but I know enough to be dangerous about all those things. So that's kind of what, you know, I'm so passionate about it. And to me, it's also somewhat personal. I come from a family of small business owners. My brother has a construction company. My sister has a hair salon and my mom has a store. And it's not lost on me every day that, you know, were it not for the banking relationships that I've been able to have in my career or the knowledge that I've learned, that's been super beneficial to my family. So when I go to these businesses, in some ways, I kind of see them as an extension of my family where I've been there, right? We know what it's like to, when we started my sister's hair salon, we all chipped in $4,000 and opened it. And now she's got 8 employees and she's looking to open up another salon. So it's going to them and removing all those barriers that were mentioned in the program. Some of those are, you know, cultural barriers. Some of those are physical barriers, and sometimes even linguistic barriers. You know, I'm really proud of the staff that we've been able to hire in all of our markets that are fully bilingual to serve this growing population.
Great, that's important. Darren, unbanked to underbanked to access to capital sounds like the story of Southern Bancorp, right? Like I feel like that was the genesis of, you know, however many years ago it was that brought folks together to establish Southern Bancorp. When we're talking about lending, when we look at the data, Southern does Southern's another place that does a good job, and CDFIs in general do a better job. You know, how do you all do it? Like, how do you lend money to small businesses, to people of color, and still make money? Because you've actually now got a mandate to make money too. So how do you do it? Like, what's different about what you all are doing that other folks can learn more from?
So first of all, Corey, let me say thank you to the Winthrop Rockefeller Foundation, to Arkansas Community Foundation, to WinRock for commissioning this study. The 3 of you all just happen to be 3 of the founding early investors in Southern Bancorp. So thank you. The work that CDFIs, many people may not know that name, CDFI stands for Community Development Financial Institution, And our mission, the very purpose of our work, is to provide access to capital and credit in low and moderate income census tracts. So this is what we do. And while we may come out better in this study, don't give us a pass. We need to do a much better job and can do a much better job. But our very purpose is to reach low and moderate income census tracts. And as a CDFI, we are designated as such because 60% of our activity must take place in low and moderate income census tracts and communities. And so I'm proud that at Southern, last year we did 7,220 loans, 93% by number, 88% by dollar were in these low and moderate income census tracts into communities of color and low income communities. 47% of our loans for less than $10,000. How we do it is being very intentional. You have to actually have aggressive outreach program to reach those communities. Go back to like 1988, there were some 14,000 FDIC insured banks in America. Today, they're less than 5,000. Where those banks have disappeared have been in Black and brown communities and rural and low income communities. So first of all, you got to be intentional on where you locate. I'm proud that the majority of our bank branches are in low and moderate income census tracts and actually in African-American majority census tracts. So you have to be intentional. You have to actually want to do it. And you're exactly right. While we are very mission focused, I always say no margin, no mission. If we don't make any money, it doesn't matter how good we are because we won't be around long enough to do it. So you can actually do this and make money. It's not just good sense, it's actually good business. And so we have been very intentional about our efforts. And you talked about the Paycheck Protection Program. That's one area where I think America saw what it means not to have access to a traditional financial institution. Really proud of our efforts nationally because of Southern and other CDFIs pushing and minority deposit institutions pushing. We pushed Congress in the second and the current round of CDFI of Paycheck Protection funding to carve out a portion of those dollars for MDIs and CDFIs. So far through this Paycheck Protection Program, some $50+ billion has been carved out to go to CDFIs, MDIs, and small banks, so we can reach those very, very small businesses that often are not served well. Those marginalized communities are not served well by traditional financial institutions.
Great, thank you. And that's important. Pulling these, making the case, and maybe we get the opportunity to make the case, with PPP and all those sorts of things that you can lend in these places, right? If you've got the right structures in place.
Can I add one thing, Corey, to that? Because you said your structures. I think this is very important. The problem here is a structural problem. The government pushed over 700, almost $1 trillion, almost $800+ billion through the Paycheck Protection Program to small businesses. But they use the distribution channels that we know are biased against Black and brown people. They use traditional financial institutions. So it was not designed to reach us. And so if we're going to continue to use these structural systems that are set up against us, then you'll never do a good job of, and this is forgivable dollars. This is money you don't have to pay back. So basically the government they're going to give away $800 billion, majority of white businesses. And they did not think until we start pushing them to say, hey, what about those small businesses? What about those Black and brown businesses that don't have access to traditional financial institutions? What about that, 10,000 FDIC banks that have left Black and brown communities? How do these folks reach? So what we're talking about is a structural problem. And this is more evidence of why we have a racial wealth gap. This is more evidence of structural inequality. And if we don't solve the structures, all the good intentions that Hillis, Miguel, and I will try to do, it's not going to go anywhere because we only have so many people we can reach. This is a structural problem we got to talk about.
Absolutely. And Miguel, I saw you there. Go ahead.
Yeah, I want to give kudos to Edward. He called me probably a year ago this time. I mean, right at the beginning of COVID, right at the beginning of PPP. And he said, hey, man, there's this thing. He was more eloquent than that, obviously. He said, hey, there's this program that's coming out. It's going to be through the SBA. He said, I need your help. I want to make sure that the LatinX businesses across the state are aware of this. So we connected him with Univision and the Hispanic media outlets. And I say that to brag on him, but to Darren's point, I think you're right. I think if we use those normal structures that, as the evidence showed earlier, typically doesn't get to these Black and brown communities, we've got to take it upon ourselves as thought leaders to say, hey, let's work together. Let's just kind of stay in cahoots so that we can make sure we solve these problems. So I just wanted to brag on Edward for his intentionality on that.
I appreciate that. Hillis, you and I talked, when we talked on the phone, Hillis, you and I talked about the need for what I call sort of entrepreneurial support organizations. So the folks that can help the folks before they get to the door of Arvest. Talk more about why that's important for a bank like Arvest to have those sort of supports out there that can help you with the pipeline,
Sure.
all sorts of things.
You know, at Arvest, we always want to be a trusted advisor to small business owners, minority-owned business owners, but we just sometimes need help from somebody that's a trusted advisor in the community to provide that technical advice to those small businesses prior to them coming to the bank. Help them, you know, help those business owners understand about the questions we're asking, why we ask them. Is it a regulatory matter? What is the product? You know, what do we specialize in? And then also they can offer opportunities like microloans from SBA. That is a gap that traditional banks can't fill. That's a wonderful thing. CDFIs like Communities Unlimited, Alliance for Rural Impact is really gearing up on technical advice. And I really think if you look at the life cycle of a small business coming to a traditional bank, it probably in the startup phase needs to go to a nonprofit trusted advisor to help them get ready for the questions and prepare them for the stuff that we ask them about.
Great, thank you, thank you. Edward, as a you know, as a federal, regional, state leader person, here's your opportunity. If you could snap your fingers and one part of the system, the structure could change, what would be the one thing that you would change tomorrow?
It's a big question. And, you know, I think Darren spoke of this, and that structural change that we've got to find. You know, for-profit banking institutions are for-profit banking institutions for a reason. To be able to create more access to capital, we've got to be able to create more available funds and pools of capital that can really reach the intended market without necessarily the drive for shareholder advancement and shareholder profitability. We've got to be able to get the money to impact the communities where it needs to happen. And I think, you know, from a structural change to change the capitalistic society we're in, I'm not asking to do that, but we, at least at the state level, need to be able to fund local impactful funds, revolving loan funds, and pools of capital that can really help serve the communities, the businesses, and the individuals we're looking to serve. And that starts in the very beginning. You know, I always say the best strategy is truth telling and financial literacy. And if we can start there, we can work on a solution.
Great, thank you. Ms. Perkins, same question. You're several years into your business now. We're assuming it's growing, but like if you could just snap your fingers and one thing about this system could change overnight, what would that one thing be?
Well, it would definitely be the equal playing field. Like you wouldn't have to work as hard if you were Black or brown in order to make it even to that level to where, hey, I'm lender ready. You know, it takes so much to get you to that place. It's like you almost have to make so many mistakes along the way before you even, you know, what's the word, fueled with the right, you know, stuff to get you where you need to go. So definitely just having access to, you know, information that you otherwise, you know, kind of, you don't know, you just don't have. It's not offered. You have to, it's almost like you have to ask the right questions. And if you're not at that point, like you don't know what to ask, you just kind of, you don't get what you need. So you have to ask the right question. You have to know what to ask. And a lot of times you don't, because you don't know that it's available. So we know is what we need. And it would be nice to be on a more even playing field in order to reach what we need in order to succeed.
Great, thank you. We've got a couple questions from the audience, but as we're going to toss those out. But Hillis, Miguel, Darren, be thinking about that sort of same question, like what's the one thing, because we're going to close with the one kind of commitment that folks want to make or are able to make. But Chantel, toss out one of or two of those questions and we can give them to the panelists.
Absolutely. Thank you all. We've got some great questions from the attendees. The first question that I want to uplift is for the bankers on the panel. Please explain what federal or regulatory challenges you all face when creating viable products or services for minority customers.
Yeah, I'll take that one. You know, one of the biggest challenges I see in the Latinx community is that a lot of the businesses are oftentimes started by first-generation immigrants, and they may not be U.S. citizens at that point in time, or they're working through citizenship. So that makes it somewhat complicated to get them an SBA loan or a state-owned grant. So if I had a magic wand, I would pass comprehensive immigration reform overnight, but that's an act of Congress, and we haven't done that since '86 with Reagan. So I think we're at a point in time where we realize we have to do something. So I think if and when that happens, you're just going to see a boom in small businesses because, part of the quintessential American dream is to start a business, right? Whenever I asked my mom, why wasn't she scared to start a store? She said she'd already done the scariest thing in the world was to leave her home. So when you put that, that zeal inside someone and you give them capital, I think the sky's the limit.
Thank you, Miguel. I have kind of a secondary question that's similar to that, but want more people to jump in. So the question reads, financial institutions and local small banks want the accounts and want to grow their accounts and deposits in creating revenue. Ironically, persons of color who are entrepreneurs want the same thing, but yet are not given the opportunity and are being denied. This seems like a policy issue, but banks are not implementing and revising their policies to help persons of color who are entrepreneurs. How can local and small banks be more intentional about helping Black and Brown entrepreneurs?
So Chantel, I'll take a stab at that. I think that's a great question. I'll tell you one thing that we're doing here at Southern. And again, I'd say you should not hold CDFIs, let us off the hook because we can do a much better job. Southern, we happen to have a $1.7 billion CDFI bank, but also a small nonprofit loan fund. So we're able to be very, very flexible and provide very, very small dollar loans and have this nonprofit do the same thing through and we're able to do that. So it gives us somewhat of a competitive advantage. But other banks can partner with our CDFI loan fund, Southern Bank or Community Partners. It's not just for Southern, others can partner with them and we're starting to do more and more of that. But here's one thing that we're doing at Southern, really in the wake of the 2020. 2020 is what I say is the year of viruses. The pandemic plus the resulting aftermath of the death of the murder of George Floyd really has made put a focus on advancing racial equity. And so at Southern, our board said, let's step back and let's look at our major policies, started with our loan policies. What is in our loan policy that is causing the structural denial of loans to Black and Brown people? And so we're going line by line through this very, very long and detailed loan policy that actually most banks don't look at, update that often. And it becomes something that's just cobbled together over the years. And we bring our own biases to the loan policy. And so I don't know yet what that's going to bring, but we're intentional about going through our loan policy right now, line by line, trying to figure out what's there, what are we asking for that may not be needed. Let me give you a great example. Every bank wants a FICO score, but honestly, a FICO score is a poor indication of whether you're going to pay the loan back or not. And most community banks, it's really about relationships. And so when the customer has a long-term relationship with the lender, they're going to be more likely to get that loan, right? And if we cannot grow more Black and Brown people as loan officers, we won't have that relationship. So the other thing that we're doing at Southern is we've been trying hard to do a better job of diversifying our talent. We definitely have the most diverse bank board in the state, but we probably have the most diverse lending staff, but it's not good enough. So we're building our own lender university. We're saying we're going to identify Black and Brown folks, and we're going to train them on how to be lenders, not just consumer lenders, but commercial lenders, business lenders, because you really can count the number of African-American lenders, for example, here in Arkansas on a couple of hands, and Little Rock for sure, in the whole state. And so we want to do that not just for Southern. Hopefully we can create that for our geography, for the Mid-South region, and that's going to take some time. We're working with some corporations who have successfully built training programs, find out how can we use best practices to build a more diverse workforce, not just for us, but maybe that they'll leave us and go to other places. Because we all know that if you had a more diverse lending staff, you're going to provide more diverse loans. So that's the other thing we're doing. So one, reviewing our policies, first our loan policy, then we're also going to our purchasing policy, because we want to also buy from folks who are in our communities, who look like the diverse workforce that we have, as well as lend to them as well. But then we're trying to create a training program that will build a more diverse lending staff throughout the state and throughout our Mid-South region.
Thank you, Darren. That's a good way to start closing us out, because we just wanted to ask folks that are here. So Darren gave two things that Southern is doing, because I'd love to come back to this conversation a year from now and be talking about how we went from 2% and change to 5%, and then how we went from 5% to 10%. Miguel Hillis, if you got something in just 15 or 20 seconds, like what's the one thing that you want to do, that you're willing to do, that we can help you do?
Well, I mean, I do think we all need to get together and talk about just what Darren mentioned, which is how do we establish a group of bankers that look like our communities, and how do we have those pipelines? From a banking perspective, we look for those qualified individuals, and they're hard to find. And so I think educating from K up and having bankers in the schools and colleges and career fairs with internship programs, a lot of the things that we already do at Arvest, I think that's very important. The other thing that I really think is important, coming from Arvest, we're #1 in PPP. We're #1 in SBA 7A loans for the last 7 years. So one thing we can do better is really learn how to communicate with our borrowers and teach them about our products. And so I hope that we will work on that and see what measurable impacts that have on the next few years. Thank you for having us here.
Great. Miguel, how about you? And then
Yeah, great. I think for us, it's just doing, continuation of what we're already doing. Just super privileged to have a boss in Aaron Simpson and a vice chairman, Philip Jett, and our bank board that really and truly believes in this work and gives me the resources and just the time to do this stuff. So I think a year from now, hopefully, we'll have those small business centers up and running. We'll have some good success stories out of that. And just for the 106 people watching, if there's something that, we can partner with, or you have some ideas, I'm sure you guys can get them my email, because, we're always willing to partner and continue this cause. So thank you all for attending today.
Great. Edward, how about you? You maybe got I don't know if you got the biggest job, but you got the biggest bureaucracy in here. But so what's the one thing you think you can do?
I think having building partners like this is key. Money alone is not going to address the resource needs of our underserved entrepreneurs who need support building financial and small business management skills, navigating the capital ecosystem, and ultimately building trust in a system that was not originally built for them. My team and I are willing to do outreach across the state and continuously with organizations of any color in any area of the state to help them become educated, informed, and help guide them to friendly faces that are willing to accept not only PPP loan applications, but applications for the American dream. We're taking applications and we're open for business. And thanks to everybody for working with us.
Ms. Perkins, any last words for all these folks that have their hands on money that you could use and your peers could use?
I guess the only thing that I would say is just continue to educate those individuals, minorities, when they come in, just because, you may not be able to lend to them. There are other unconventional ways that work, and institutions that work with SBA, such as Forge. I definitely recommend everyone get to know Jay Young. He's amazing. He's amazing. So shout out to Jay.
Thank you. Dr. Scantlebury, I'll turn it to you to close this out.
Thank you. Thank you, all panelists. I truly appreciate each and every one of you, Bridget, Hillis, Darren, Edward, Miguel, Dr. J, you guys were just outstanding. I do want to reiterate something important from our study, or from the study, because I saw in the chat and in the questions that people are trying to find solutions. This is a systemic challenge that we have before us, as the panelists have just said. This has been happening historically and chronically. And Edward said it excellently. This system was not intended to work on behalf of women and Black and brown folks, and it does not. So there needs to be some intentionality to ensuring that it does, so that Arkansas small businesses can thrive in the future. So we have a systemic challenge. With that, I would encourage everyone to please get a copy and view the study. There will be a follow-up email that talks a bit more about how to do that, but you can also do it at wrfoundation.org. And please, we ask that you share this invaluable data with your local networks, and ask any additional questions that you may have regarding it. I also want to say that there was already a link to the presentation during the webinar, but again, post webinar, we're going to send an email that talks more about how to do so. Next week, and I'm really excited about this because this is our first time doing it. Next week, we'll be hosting an after webinar conversation on Clubhouse to further explore the insights we heard in today's discussion and go a bit deeper into the systemic challenge and what are those solutions. Because it's going to be a lot more than educate, more people of color should apply. It is much deeper than that when we're saying that, 2% of all loans go to women and minority businesses. And even with the 12 or 13 banks combined in Arkansas, even their lending combined is not significant or make a significant dent in going to minority businesses and women-owned businesses. A lot more work needs to be done, a lot more conversation needs to be had, and we have to be intentional about what those solutions are. So please stay tuned for our next steps, for more announcements and ways in which you can join us and personally commit to changing how this system currently works. Thank you so much for attending, and we appreciate all of you. Be well.